Alrighty. Hello. Welcome back to Or Plus. We are in our final 2 days. Our final two for the demo. I'm excited. I honestly want to succeed at this. And so I'm going to put my all into this. I'm tired. Just a little tired, but I'm good. I'm not so tired I could just crash out the blue. And my mental is okay. We're currently in an uptrend. We haven't broke out of it. We had a fair value gap that was revisited. We didn't sweep a low, but we did stabilize here. And we see ourselves moving back up. That's on the daily. Let's see what the 4-hour is saying. 4-hour also says we're an uptrend. We broke structure. Boom, right here, above that high there. Broke structure, revisited both of these, swept past the low, and created a doji. This doji is indecisiveness, but continuation of the overall uptrend. Based on this doji, we continued higher, had a fair value gap, price gap, and then a continuance higher. That is on the 4-hour. We were in a downtrend. We see ourselves moving higher now, to higher heights. Going to the hour. Hour also says we're in an uptrend. Same story, but a little bit more detail. We broke structure right here. Order block, revisit, close within, continue higher, boom. Continue higher. We broke structure temporarily to revisit the higher time frame order block here. Revisited, swept none of the lows outside of this one on the lower time frame. Revisited this, closed within without sweeping past. Boom, moved higher, breaker block. Sweet. 30-minute. A little bit of a wonky situation we got going on here. So we had, from this consolidation, continuation higher. And to really gauge where price is now, we had break of structure and a fair value gap to boot. Was this a retest of any of this? No, this was a fresh break of structure. In fact, if we go to the S&P, it's a little bit of a similar situation, similar-ish situation we got going on. Okay. We broke structure here with a fair value gap. We might continue lower to revisit either one of these, or even further down, could revisit this. Don't know what's going to happen with this, to be completely honest. I know that based on the 1-hour, we haven't broke structure. Instead, we've consolidated just a little bit, though. We created ourselves a snail trail. Could see it go higher. General trend is still high up. Same story here. General trend, we closed. That looks like it closed underneath. It did not. We should see it continue higher based on the general trend already. And if I'm wrong, I mean, it could continue back down. How far down? We have a fair value up here it could take. We have a low here it could take. Shoot, it could go all the way down here if it wanted to. Market open is going to be a little bit interesting, just a smidge interesting. But yeah, we have our Asian session low here on the 30-minute. London session low, London session high. General range, NASDAQ, same story. Same structure, nothing much has changed there. I'd go to the 5-minute, but right now my strategy is saying don't go anywhere near the 5 or 30. Instead, we're going to use the hour to really gauge the key level hit. Once it's done, not the way there, that's when we'll move to the 5. So far, everything is pretty much in line, except for the 30-minute. We're going to ignore it temporarily. We're going to ignore it for right now. We're going to focus on the 1-hour, 4-hour, and the 5. That's what we're going to wait on. That being the case, we're all in an uptrend. Let's check what news has to say. We have 2 orange folders. That has changed since last week. Because it was 1 orange folder. It was just this one. But now that it's Monday, President Trump wishes to speak again. And Tuesday has not changed. No biggie. We'll go ahead and shrink that down. Yeah. A correction on my part. Last week, Thursday and Friday, realistically speaking, Wednesday, Thursday, and Friday, I got into learning auction market theory. I got into learning orb strategy. I got into learning a whole slew of information. A whole bunch of information that would not benefit me. And it came in swinging Friday. It really, it got good Friday. If you're not familiar with what I did that video, go check it out. But to reiterate, it wasn't to my advantage. It wasn't to my helping. It wasn't to my liking. It just wasn't good at all at any point in time throughout the whole thing. Because my ultimate goal to start with was to find an explanation as to why market went up and down and right. That's all I was looking for. And then I found a comment. I found a thread. I found a link. I found a video. I found a whole slew of information about the information I've been going off of since it's 2025 right now. I got that job 4 years ago. So, not 2021, but 2022, late 2022, early 2023, right? The people that teach it, the exact same people I learned it from, are not reputable sources, meaning their strategy's flawed, and anybody in the day trading area, auction market theory area, people who know what they're kind of doing, just a little bit more than I do, right? Say just a little bit. These guys have PhDs. These guys have every logically sound reason to be within the day trading space, compared to average Joe Schmo like me. They essentially explained throughout all those different threads I went through, and I went through about 4,000 threads in the span of 4 days. Each one was like, yeah, this guy is irreputable. Don't go near this guy. The strategy works if you can get it to work. Congratulations, but I will never use this strategy. I have a better strategy. It works this way. It works that way. Yada yada yada. And they make the sound logical argument that I was going for as to why market was going to move into what their strategy was. And I couldn't find a flaw from beginning to end. And that could just be an experience, but at the same time, when I've learned to understand that when words, English words, go from one point to another, and not that they take pictures and show proof, but when they go in such a line that it doesn't sound too good, but they can accurately depict each and every little facet about the market in hyper detail, and then go into a spiel on algorithms and indicators to an extent, and a strategy that, which from application based on a theory, is just as sound as the strategy I have. I got convinced somewhere along that line that I started to believe them. I started to take their strategies and apply it to what I had already known. Well, I made a couple of mistakes. When I did that. First off, I tried applying a theory to a market. I just wanted to know how it moved. And from there, I decided to implement a strategy. That strategy is not used the same way TJR's strategy is used. Okay? TJR, from my understanding, is taking the imbalances and taking the win off of them from start to finish. That's TJR strategy. Find the reversal out of a market and a auction close. Okay, wait for one to end, and then from there find the reversal and take the reversal on down, the imbalance. Right? That's how TJRs works. Auction market theory goes from balance area to balance area, finding the point and then just following the whole line. It sounds and is the same thing, but uses two very different principles to get to success. My mistake was thinking I could learn auction market theory the same way I learned TJR's strategy in a blink of an eye. That was my first mistake. Second mistake was treating them as though they were the same, when auction market theory treats ranges as open, close, and TJR is based on reversal. And market makers, manipulations, all that fun jazz. I now know a little bit better than I did before. And I'm taking the overwhelming majority's advice. I have found a strategy that works for me. I have gotten it to work the past 2 months. And I strongly believe that I can continue to get it to work these next 2 days, today and tomorrow. This is to better succeed the demo account without convoluting my screen with anything else. And this will allow me to... That's my active gone. This will better allow me to realize profit loss ratio gain, the unrealized. It'll better help me realize the success of the demo account. I probably said that twice, not gonna lie. I'm a little tired. I'm sorry. I get it. But you get the point. I hope you get the point. Today and tomorrow, I'm not going to touch another theory. I'm not going to touch another freaking strategy. I'm just going to start. I'm going to finish off the demo account I've been working towards the past 7 months with a strategy I know. And my hope is that I can continue to do that. Like, really well. We're going based off the hour first. And from there, we're implementing the strategy. I also learned over the past 4 weeks rules of engagement for S&T and how they really work. Because I couldn't find anywhere that had solid information. I know order blocks, no breaker blocks. I know how they form, how they work, what to look for, and where to go with those. But S&Ts can be applied to these specific ones because they're indices. I can use them on this. What was I gonna say? I figured out the rules of engagement, and I intend on implementing them here. That's how I want to implement them. Hopefully we can actually take a decent trade based on those. Yeah. Can't think of anything else for that. I did a lot of work over the past week. I got lost in the sauce and am now virgin like the oil. I can't think of anything else to say right now outside of right now we're in an uptrend. We haven't broke structure. I intend to see price continue higher. We have an hour before market opens, and I want to wait and see exactly what market's going to do in order to best take care of this. Don't want to take longs right now. That's my daily bias. Longs. In fact, we've been in an uptrend for so long. We broke past two levels of value, and it could target even higher up here. So what I think is going to happen is we're going to see a reversal temporarily to manipulate this. We'll see it come down, sweep past maybe this low right here, and then a curtail higher. And then it'll target all of this. Because this right here is relative equal high. Serious zone right there. So, and this is an all-time high. Do I think this is going to be final take profit? Probably. I want to take a long right now. That's my bias. That's how that is. We're going to go over here. We're going to take every point of liquidity starting with that high there. We're going to go up here. Good. Nope. Nope. I think that's all we're going to get from that. And then my final take profit will be probably up above this. And that first one's pretty dang close. So right now we've got relative equal highs just by sitting here. We could see price. Well, this is the 5 minute. It's come down far enough to hit this almost. Almost hit this. We're seeing curtail now. So let's go ahead and go up to the hour one more time. Boom. Boom. We're going to do the same thing on NASDAQ real quick because S&T is very finicky. Very, very finicky as far as I could tell. Anyway, this one here. All the way up. All the way up. Let's go ahead and grab this here. This is a little bit more of a clean mode of here's a fair value gap. Here's a high. All of these could be easily taken profits. It might not even reach as high as that. It could be this fair value gap right here that it gets to and then reverses. We're going to mark that fair value gap just because. I want to see if there is a fair value gap in the same spot. Well, there probably is, but yeah, there is right there. But this right here has swept past this imbalance. So we could see price get up to this right here and then completely reverse back down. So realistically, we only have 3 take profits because there's no fair value gap within this right here. We have move up, move up. Those are relative equal highs. No fair value gap within that right there. There's a high right here we could probably target, but again, this take profit here is in line with this, and I'm tempted to say based on that, like that is almost smack dab in the center of all of this move. So this is very likely to get hit and then reversed off of, retest zone down here, and then continue higher. If I had to guess, that is a guess. That is not working with auction market theory, just so we're on the same page. I'm going based off the way the chart looks. This was consolidation for a while, and it's only recently that it actually broke structure. The relative equal highs were made. The high are different. See it? I wish it wouldn't move, but it's going to keep moving. So we're going to do this. On the other chart, this high is higher than this high. SMT based on that between the two. I can't swap the two, otherwise it goes back to the other side. But you can kind of see it right now. This high right here, sorry, it's this right here that's higher than the rest of this. Major difference in market. We know price is going to want to come up this high, but we don't know how high, because this is the all-time high, right? And we know that this was an imbalance because we had a fair value gap on the NASDAQ. Unlike the NASDAQ, the S&P created a high after this imbalance. So it's got to retest this zone based on auction market theory. I'm going to digress because that is the guess. Based on TJR's theory, it is an imbalance first, and then it is a liquidity grab. Okay? We might have relative equal highs here, but until price gets past this, we don't know that it's going to hit this. And because the alternate chart has a higher high on this third key level, this third take profit, it could easily come within this and then reverse before it even tests this imbalance. Okay? Let's take that, put it on the back burner. Okay? Here's our range for take profits. Here's our range for take profits. This third one, we're going to make it fancy. We're going to put red line. Here's our rule. Here's our quip with it. Okay? Because we know this is the final high that matches in trend. So, my thought process is if we reach this high, exit strategy, consider thinking. If it reaches this high, consider a break of structure or any reversal sign to be what it is, under the pretense that we're using this blue line and the MACD for confirmation. Okay? We could reach this red line and continue higher. If so, hooray! But if we reach this red line, the blue line meets it, and we get a break of structure below said blue line, and the MACD's orange line matches the price action, we are getting out of the market. That is our final take profit. That is our final close. I don't care what market does beyond this point, because I know if it reverses here, it's more than likely going to continue down, stop hunt us, and hit us. Because it's got to retouch that whole range before it can even touch this imbalance. Is that a logical, sound enough approach to you guys? Does it make sense? It makes sense to me. So we're going to use that logic to our advantage. We're going to go back over here. Go to the 1 hour, not 30-minute, but the 1 hour. We're going to zoom in on this so we can get a nice, decent picture. Same story here. Zoom away the flip in. Boom. Boom, 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 boom. Good. We have stuffs to look at. The only reason I'm not considering an SMT divergence at the moment is because the patterns match. We have a high here, a high here. We have a low here and a low here. Same story. High here, low here, low here. They are different, I will agree, but they are not so different that they alternate between the two. Okay? The low is still here on this candle. The high is still here on this candle. The high is still here on this candle, making this whole pattern match really, really well. And because of it, there's no SMT present yet. Absolutely none. So, right now, so we're on the same page, my bias is that we're taking longs today, based on the daily, based on the 4 hour, based on the 1 hour. We're in an uptrend. We are waiting for price to continue higher. We're waiting for a reversal down so we can see that reversal back up. Okay? That's what we're waiting on. Based on current price action on the hour, we haven't got an SMT, so I'm waiting on a key level to get hit. That is the only thing I am waiting on. As soon as I see a key level hit, we're moving to the 5 minute. We are within pre-market. We're moving to the 5 minute. For funsies, let's do what we've been doing for a little while. There's the low outside of current price action. Where's the high? The high out of price action is all the way up there. So this is clearly out. And this is like smack dab between the high and the low. So we have a fair value gap right here we could look at. If we wanted to take a low, if we thought about taking a low, okay. Instead of taking a low, taking a short, we have that low there, relative equal lows there. We were there, we broke structure here, so we have a order block here from this high down to this low. I'm going to keep this range present on my chart until this convinces me it's continuing higher, because though it was retested, closed within, bounced off of, and continued higher, it could see a revisit and a disrespect, right? And then a continued lower. Though the general MO is that right now price is in an uptrend, it could come back down. It could, it has before, it will again. We don't know when. That's the whole point in this. Right now we have a fair value gap, first low, second low, order block. The only reason I'm not encompassing a breaker block is simply that. It's a breaker block. It's the continuance higher. The order block is what's being tested in this case. Prices were filled. Continue up higher. Fair value gap was the double confirmation. Breaker block, fair value gap. Yes, we're going higher. Okay. This would have been an entry. Continue higher. It wouldn't have been as satisfactory as getting in on it right here, but it still went higher nonetheless. And it could continue higher based on what it does up here. I want to go to the 4 hour real quick, because testings. Downtrend break, range of breaker block, or order block, sorry, on the higher time frame is from this high right here down to this low. So I have no problem changing this to about right there, because I want to encompass this entire range for my better usement, right? And for this case, we're using higher time frame holds higher power. So the 4 hour holds power over the 1. And because of that, order block range is there, breaker block range is here, and the continuation higher is there. It works. The next mode of liquidity that we can really hunt after is probably this right here, but there's a problem. This is not a low. This is just a tail that moves higher. On the lower time frame, sure, there's a low, and then this, we could probably mark it. But on the high time frame, it holds higher power. it'd actually be this low that would be hunting after. And I'm not entirely concerned about it because we've already swept past prices revisited and gone beyond that low, making this an invalid take profit. This would be the next closest thing that I would really hunt after, and because of this major indecisiveness, I'm not even gonna touch that. That can stay right where it is. Instead, I'm going to continue looking from this higher and anticipation that price is going to continue higher. Same story on NASDAQ. We'll do the same thing here. We were in a downtrend. We're looking for the break of structure above a high, making this right here our order block. So there is a difference in the range between that. We had a little bit of a lower order block there, but it'll work the same. There's our order block on the 4 hour. Let's go to the 1 hour. We had, again, the fair value gap that we can hunt down. For funsies, same thing. Low outside of trend, current market price. Let's go here. There. Boom. And then, of course, we hunt down that low there. I know that does not look the same. I know it doesn't look the same. Primarily because they're different, just a little bit. Let's actually take a look at that. We're on the 4 hour for both. So here's our lows. There's low here, low here. Cool. Hello, difference in S&T. There is a difference. Since that difference, though, price has caught up between the two indexes. So I'm not entirely concerned about this S&T. I just know at the moment we had a higher low there, lower low there, lower low here, where it was higher on the other one, and a higher low there. Big difference between the two. Now, the previous set of rules of engagement that I was going with said if the NASDAQ created a lower low in an uptrend, while the S&P created a higher low, price would rise. So far, that's correct. So far. New rules of engagement, though. If the S&T occurs, space, comma, whatever, separate the two. If it occurs, look at the range between it. The whole range, top to bottom. Encompass the range. The first chart that breaks out of the range is weaker than the other because the other will hold its position for longer. It will lag behind. The trade goal on that instance used case is the weaker of the two charts. Spot the S&T, mark the range, the first chart that breaks that range, trade on. That chart specifically. It will tell you where it wants to go, and it'll continue in that direction until both charts line up and we see a break of structure on the flip side. That is our new set of rule of engagement. And only when we see a break of structure on the 5 minute based on that S&T from the higher time frame do we see an exit strategy. Okay? That's currently what I'm working on. 1 hour. And this falls directly in line with TJR strategy. I've gone through every possible scenario with S&Ts in the past 4 days, just looking at the chart and spotting them. And it works almost every time. So, we're using that logic. Hello, 8:44. We have a little bit before market open. I'm going to wait. I don't care what price does right here. I'm very tempted to see what it does here. We could see a lower low here. We could see an S&T divergence happening, actually, because this is already above this. That might be an S&T that's occurring right there. But I'm going to stop what I'm doing. I'm going to digress all the way. I want to wait. And so I shall. I will pause the video, wait for market open, from market open onwards, we'll unpause the video, record. You'll see every little decision I make all the way across, and then from there, yeah, we'll see what happens. If you're considering subscribing, I suggest doing it now because it tells me you like the videos. I appreciate you actually subscribing if you do wind up clicking that button. I've been working on this for 7 months. I've been watching this kind of information for a little over 4 years now. Hello, key level hit. SMT. I think SMT. I'm going to wait, though. I'm going to wait patiently. We're going to watch this and see if it hits this key level. Because if it doesn't, that means this is false. This is the, sorry, NASDAQ's the weaker of the two. We could be trading on NASDAQ. I announced Friday that things are going to be changing. The times at which I upload are going to be changing. The amount of content I put out is going to be changing. What kind of content I'm going to put out is going to be changing. Streams are going to be erratic per the day. But the day before, as soon as I can schedule it, is going to be scheduling day. I'm going to schedule it out, get it nice and compact for you guys. And from there, I'll have a VOD up on Orb's Vault, hopefully the following day. That's my thought process. We have another stream this Wednesday, so keep an eye out for that. We're going to be streaming Wednesday, another 5 hours, so that's a thing. Yeah, just to fix that's to fix last Friday's stream because I only got to like 3 hours worth. I don't think I got to 3 hours. I think we streamed like 2 hours, something like that. I might be streaming 6 hours instead. We'll see when we get there. I have to figure out what's going to happen Tuesday, though. Wednesday, things are going to change regardless, but Tuesday, I really want to get through before I solidify what I have said over stream already. So we're going to get that out the way first. So far, it looks like we are going to get an SMT. We have 11, 12-ish minutes for that to close. This is the hour time frame. That will bring us directly to 9. 9:30 is going to give us the continuance of that. We could see SMT on the hour. Let's see if it says the same on the 4. 4 hours, just a straight uptrend. Yep. Go back down to the hour. All right. I think we're good. I'm going to pause the video. I'll be right back. I think this is an adequate spot to unpause the video so you guys can actually see what's going on. We got an SMT divergence, just plain and simple, and I marked up some of my notes so there's a little bit of a understanding with us. Let's just break it down real quick. S&P made a lower high. You can see that by this blue line here. I know it's very hard to see because it's so close to the white line, but there's a blue line right here, right? Goes from one high, up, down, highest point, between another high, up, down, higher point, right? It's low, though. It's a lower high, okay? Now let's move this here. And then let's take a look at NASDAQ. NASDAQ did something different. Created one high here. This is the same candle on the other chart, mind you, right? Up, down, highest point between the two. And our new high, up, down, newest point, right? It created a higher high. It also wicked beyond our second take profit over here. Sorry, the first take profit, right? It pushed beyond it. That being the case, rules of engagement. based on my notes that I literally just got through typing out. Just save this so it's out of the way. What's looked for in a bullish divergence? Asset A makes a lower low, but the other fails and instead makes a higher low. Interpretation: this is a sign of relative strength in the second asset, indicating the selling momentum may be fading and a bullish reversal is likely. That is if it's bullish, right? Bearish divergence: what to look for? Asset makes a higher high, but the other fails to do so, forms a lower high instead. Interpretation: this signals that buying momentum is weakening, suggesting a potential bearish reversal or a sign of distribution by institutional players. So, what exactly does all of that information mean? Because it doesn't make any sense. Asset A, B, whatever, it doesn't line up. Technically, it does actually. If we consider in this instance asset A making a higher high, NASDAQ, and asset B making a lower high, that means we have a bearish divergence occurring. Essentially what this means is that the buying momentum is weakening, meaning this uptrend is weakening and there is a potential reversal happening within this. We'll see a break of structure, potentially see it can go down. That is potential. What is an S&T at its heart though? It is a confluence among a framework. It is a potential reversal confluence amongst a framework. That framework is what we're looking at. We have an SMT. Now we're looking at, because we've already got the manipulation of the high here, right? We're looking at the now reversal sign. We're looking for market open, and then from that, confirmation that the SMT is correct. And the first one of these two charts to break the range, so from this high down to this low, and we'll do the same thing over here, from this high here down to this low here. First one that breaks beyond this range, closes underneath, is the weaker of the two, and we'll be trading that one, okay? Because the NASDAQ has already manipulated the high here. We haven't gotten to market open. We have 15 minutes. But it's already manipulated past this high per London session. S&P hasn't done the same yet. We know that there's a potential for price to reverse on down. Where could it target? It could target here. It could target all the way down here. It could target this price gap right here. It could target, well, I wouldn't say this fair value gap because this is literally really close to the range. We could probably spot a few lows throughout this right here. It might target this. It might target this. It might get as low as this. We don't know. We won't know until we see that break and then the move. We'll put our final take profit like right at this because we know this is a range it could revisit. If that's not a plausible situation, we'll take a look at this right here, and we'll use this. We'll use this one as our get out. Okay? We'll do the same thing for both. The exact same fair value gap and the bottom half of it. We'll put our final take profit below this one because that's where we have it marked on both. But this is our ultimate take half. If we see a break of structure and a reversal up out of this range, get out of market. Not even going to play with it. Stay away from it. Don't bother. Because ultimately, we're still in an uptrend. And until we see that break of structure up here, we're going to consider we're in an uptrend. Yeah, we're just waiting. We have that much longer till 9:30. I think that's 12 minutes. 13-ish. 13, 12, right at. We're going to wait unpaused for this to do its thing. Once we see market open, key level. That's what we're after. We now know on the hour we have an SMT for a bearish divergence. We want to see if it'll follow through and manipulate the low. If it does, yay. Yay. Cool. We know a retrace is due. on the hour because we've been in the uptrend for a while now. How low of a downtrend? Something like this, I'm thinking. Last time we got something that long was way the flip over here, and there was a serious move down from it. And it's flipped. The amount from high to low here is flipped. Goes from low to high there. So we could see a move down like this, and it could also wind up being something like this right here, where we have a bunch of volume up high, and it just sits on the low for a while. We want to wait for a key level hit. We want to wait for this range to be broken out of. We're going to wait. I'm going to distract myself a little while. I'm watching TikTok, tickety-tockety, right? We're going to wait patiently. I'm going to wait patiently. Okay, so we broke past the range on the S&P first. Both are following suit. Break of structure, manipulation of the low. S&P broke past the low first. So we're going to take a look at this and make sure things... We're about to be at market open. From the hour, we go to the 5. I think we're going to see a big old change here in a moment. Yeah, we're going to see some volume here in a second. If we were to go off of what we have right now, we were in an uptrend. We broke structure here, order block. Here's our move down, manipulation of low. If we see a retrace higher, that's a fair value gap there. That would work for us. Yep, I know. This is market open that we're currently messing with, though. How much lower do I think it'll go? It could honestly go as low as this stuff right here. It could target anything within this and then reverse back up because we know the general trend is up right now. What am I looking for? Well, we're at market open right now. We have a break of structure during pre-market and a fair value gap if this closes in the next 4 minutes. That'll better suit us. This has already come back up. I'm guessing within equilibrium. Let's go ahead and take a look at this. From this high to this low. It's come within this equilibrium. We need to see it close and then a drop afterwards. The S&T says we'll see a bearish run. And that's currently what we are seeing right now. I also want to see a fair value gap form. The week of the two is going to break the area first, and that's the one we want to trade. The S&P was first. That's what this one will be. Nasdaq's gonna... Ooh, Nasdaq was going to do that. It seems it's not going to close within this range. We might get a retest of the order block here. So let's go ahead and mark that from this high down to... that's difficult. Let's go ahead and just leave that as a range. And this isn't even coming back up. This is just leaving a fair value gap. What news do we have? That's at 10. The only news affecting us is at 10 right now. Greater than forecast, good for currency. So far it's gone up. We could see it go up higher. We might see it go lower. The likelihood of it going lower is pretty high based on previous's. Okay. We have a manipulation of the low. That's done and set. I don't want to count this right here. I don't want to. Because every time we've done that, we've seen it manipulate the low and then reverse immediately out of. And we're in an uptrend. We are in an uptrend. Got to keep that in mind. Let's actually take a look at the hour. In the next 30 minutes, if this closes below, that'll be a downtrend. But until it does, we're in an uptrend. 4 hour is still saying we're in an uptrend as well. Let's see what the 4 hour might be targeting. Because we have break, retest. And that goes right up at it and continue lower. It could be testing this range here. Let's go ahead and just mark this. Not something we can overlook because this is an order block on the 4 hour. They could be trying to retest. We just don't know. So we're going to take every precaution. If it doesn't retest that range and it just skips past it, that works for me too. I'd rather know though. I'd rather know than to be sorry. This has come up within this range. Looks like it's going back down. We have 36 seconds for this to close. Let's see what happens. Because this could be our breaker block, sign of continuance on down, which will further feed into this bearish run here. Because we've gone up, but we haven't necessarily done this. One's going to be lagging behind it right now. That looks like it'll be the NASDAQ. It retesting this gives us a confluence, sure, but ultimately the position, that price action is lagging behind the bear run that the S&T had predicted for both, and the S&T is following through. Breaking through that low first confirms that this is the bearish, the weak one. We have a fair value gap there, but I'm not going to look at that. I'm going to pretend like all of this is moot at the moment. I'm also going to do this. I don't care about that. I don't care about that. Why don't I care? Because that is before market open. Biggest problem I have is before market open. So I'm not going to look at that. Not going to care. Leaving it alone. Hello, bonus S&T. Lower low on the S&P while NASDAQ creates a higher low. Range for order block here. Let's see what happens. I want to trade this, but I really don't want to enter. Not right now. I want to wait till roughly in this after news. We have at 10 o'clock news, which is dead center of this, and that could change things a whole lot. We got a whole bunch of stuff we could hit too. Looks like after market open, we're going to see a break of structure here. Which this would align with my confluences. I don't think I want to look at that though, because the weaker of the two is what I should be trading, not the lagging index. It's touched that order block range I said it would test before. We'll see if it continues beyond it. Because we could get a order block, or not order block, a breaker block retrace. I want one more confluence saying it's going to continue going down before I enter. If it continues going down, cool. I have no problem entering on short just to see what happened. But at the same time, looking at the MACD at the moment, see how sharp a move down that is? And it could continue going down. It could very well continue going down. However, there is no confluence at the moment inside of market open that says it's going to. That's what I'm waiting on. MACD confirmed this reversal up here, this break, so we could see it continue lower. I wouldn't mind seeing it coming back up and retest this right here. It would respect the fair value gap and then continue lower. At the same time, if this candle right here closes, we get a fair value gap. That's my continuation confluence. That confirms this reversal confluence up here. It's retested this order block a whole bunch of times too, so potential breaker block if it closes. And from that, we could see it come back down following the S&P. Because the S&T was a bearish one, so it indicated price would run down. But before it can run down, it's got to give us confluences. Inside of market, we have breaker block, but no break of structure. Break of structure occurred before market open, which is okay because MACD confirms it. So breaker block, here's our second sign of confluence. And we can go to the 1 minute if we really wanted to. Look for a break of structure back to the downside. Though this is probably more, this is going to be more risky than just sitting on the 5 minute for this. That did not give us a fair value gap either. It would need to break it below a low for us to enter on a short. This hasn't broke structure except for right here, essentially. Let's see what the 5 minutes saying real quick. Because it's gone down far enough to hit this, and it could be reacting off of that order block, breaker block zone right there. We could see it jump up higher. That's also a thing. We need to wait for close. Because at this point, holy crap, at this point in time, the high on NASDAQ was manipulated first. So there's a serious S&T happening now. Between them, we have higher high being made on NASDAQ with a lower high being made on S&P. Same story with the lows. Higher low, lower low versus lower low. No, the lows are the same. It's the highs that are issue. So if we go by rules of engagement, asset A, we're not going based on lows. We're going based on highs at the moment. Higher high, but the other fails to do so. Right now, NASDAQ is A, making the higher high. Buying momentum is weakening. This is weakening, suggesting potential bearish reversal or sign back down. So we could see a move back down to continue this move. The weaker of the two will break the range. Right now, it's following suit with this. So we're getting continuation confluence based on SMT, but we're not going to use the SMT as confluence because it's just doubling up on what is already there for the NASDAQ because it's got to catch up with the S&P. So I think we could use the NASDAQ. We could. That's a serious for value gap right there too. Break of structure for value gap. We could ride that high all the way up. But this has got to close before we can count this as a fair value gap, which means 5 more minutes. Unlike the S&P where we don't have a break of structure except outside of market open. And we have a retest here as a breaker block. Right now, NASDAQ is giving me more confluences. That is the only reason why it's overruling the S&P is because I see more confluences with NASDAQ. We've gotten the break of structure inside of market open. We've almost got a fair value gap in the next 4 minutes. If we get the fair value gap, I'm tempted to enter trade based on just that. Because we've gotten 2 SMT confluences that were just reversed on the NASDAQ. And the 5-minute MACD orb strategy actually confirms it on the 15-minute. Because that opening range goes from so low to so high. It's assuming price is going to go higher. We got 3 minutes for this to close. Give us this for value gap. It disrespected this order block, so not a breaker block. This would not be equilibrium. An inverse for value gap. At that rate, we might actually continue up all the way past this. Not gonna lie. And we could see it hit this and reverse back down. That is the hard line for reversal that we're exit strategy on. If it passes this and goes beyond, I'm convinced it'll continue higher. Minute 30, let's see what happens. See if SP gave us anything. Nope. It's just bounced off of this range down here. This could inverse in the next little while and give us a confluence we didn't have before on the NASDAQ. But right now, NASDAQ's in the lead with the confluence number. I'm inclined to think NASDAQ's going to be the one to give us what we want. This is a break of structure, making this an order block, which means this needs to go as far down as that right there. Price come back down within this breaker block style and then move up higher. This fair value gap says price is going to continue higher. I'm tempted to see a break of structure within this before I enter, just to further confirm that continuation confluence. But at the same time, if we don't get it, that's completely fine. This is based on two things. One, the MACD. Two, the fact that we got a break of structure within market open. And then three, we have a fair value gap. We have a giant order block for it to come back down if it wanted to hit it. And this coincides with the order block we marked down here. The spacing is about the same from the previous order block on the higher time frame. And we still have lack of confluences on the S&P. If this closes and gives us this fair value gap, I'll enter. I'm going to give us space to work with. That's a close and a fair value gap. Let's go ahead and take a look at the 1 minute though. Right here we had consolidation, cool, break, order block, so it could test this range right here and be fine. Or it can give us a inverse for value gap, which will be right here. One of these two needs to be hit. What in the world is happening over here? Gonna move up, cool. Yeah, and black confluences though. Oh, range 1. This will be the inverse for value gap that we're after. What direction are we entering in? Well, if I'm on the NASDAQ, I think I want to enter short. Why? Because the S&P is the weaker of the two, and it's currently in a downtrend. Trade with trend. We've been in an uptrend so far, so up is also the direction I want to go in. Let's go 1 minute real quick. Breaker block, continuation confluence. I'm gonna back down to 10. We're gonna ride the high. I want to take a position, stop loss, put this one at this, take profit. Just up here. Do I like this? No, I don't. I like this. 1 to 2 risk to reward. Sounds good to me. And this is the all-time high that we're currently working with on this. So we could see it continue beyond that. We also have news, which is going to be a big factor. We have 5 minutes for news to come out. We want this number to be greater than the forecast, so it's good for currency and continues higher on the NASDAQ. So far, it's been roughly the same, -4 to -4 from previous to actual for August. It was an increase from the previous, though, to actual, so we could see the same thing. Forecast is 0.2. We really could see it go up. We'll see that here in a second, though. See what happens. Okay. Okay. Major indecisiveness because of news. I don't mind seeing it. It's totally fine. My stop's right there. I think I'll have it resting. The flip side of this gives me a little less of a risk to reward ratio, but the only reason that's the case is because we could see that occur. The only reason I moved that was because I'm thinking like a retail trader. I want the best risk to reward ratio possible, and I know if price comes down within this range, I'm getting stopped out. And so my thought process is, because of that, I'm going to take the flip side approach. I'm going to put my stop loss a little bit lower, just below the previous high. So that way, the end result is I have a little bit of wiggle room for price to come down, retest this fair value gap again if it wanted to. And then from news, if it decides to be what I want it to, we can continue higher from there. So far, it's in the affirmative that price is going to continue higher, but we need to see what news is going to be before we go ahead and go, yay, we're right. We have 3 minutes. Let's see what happens. News is forming on this candle here, so we shall see, we shall see. This is probably a bad idea to trade along right here. General trend is up, though, on the NASDAQ, and it's given us the most confluences. We got a fair value gap, we got a break of structure, we got literally almost everything we needed to take a trade off of the NASDAQ. The only thing that hinders me, the only thing that disturbs me at the moment is the S&T divergence, because it's on that weaker one that we have the move down, right, per that S&T, which was confirmed by the MACD and the orb strategy move below the SMA. That's the only thing that disturbs me. That's the only confluence that really breaks everything. Ignoring that confluence, though, and adhering to the rest of the confluences based on trend, NASDAQ is in the right. It's the stronger of the two. It's going to go in the direction of trend. The S&P, being the weaker of the two, is going to either continue down or rapidly catch back up to the NASDAQ, in which case we'll see it continue higher. Minute 41. Let's go ahead and refresh this. Did he speak already? Hot dog. He did not speak yet. Let's see. I'm not going to touch the keyboard anymore. I'm going to let price play out. NASDAQ is the scary one because we can't rely on breaks of structure because it can reach a distance before it breaks, especially in the uptrend it's in right now. So I'm thinking if we see it take profit, we're just going to take it. We've entered on a 0.1. Hello. Let's see if news hit. It did. It's pending. I'll refresh this. X out of this. We're going to bring this up. Bring that down. So far, it looks like it is going our way. So far. We'll see what that means here in a second. Four. That's a huge difference compared to this. So we might actually see it bump up significant here in a little while. That's bigger than I thought it was going to be. Because the previous to actual on August was from like -4 to -2. -0.4 to -0.2. So to see a 4% is massive. Which means here in the next little bit, we're going to see a big move one way or the other. And I think it's going to go up. I think. If we get stopped out on this, it's actually going to suck. Trend says up. Everything about it says up. If I'm wrong about this trade, I'm going to go watch TJR's news videos because I understand NASDAQ and the S&P are not the US dollar. That's essentially what I'm after, is the USD, if it's good for currency or not. And I'm curious to know if my thought process behind news affecting either one is correct. If not, that kind of bites, because I thought I was under the right premise. But if not, I'll rewatch and learn. I'm learning the hard way, I guess. I am learning the hard way. I'm not guessing. I am learning the hard way. We've entered on a trade based on a break of structure, a fair value gap, and then a break of structure back in the 1 minute. We're at the 5 minute at the moment, waiting for price to retest an area and then bounce from that, continue higher. S&P was the weaker of the two. It broke out of the range based on the bearish divergence, but immediately after it broke out, market opened and then flipped the script. So we could see it continue higher based on NASDAQ's moves. The S&P is tanking and has consolidated since. That consolidation based on the S&P move is convincing me that it will continue higher, but it's got to consolidate enough for that liquidity to be reached. We'll see. Lagging index. Just gotta wait. Just we're on the same page. That's my stop loss ratio right there. 1 to 1.42. It's not a good one. It's not good, but it's not bad either. If we reach this, we'll start scaling out 2, 4, 6, 8, and then we'll finally let that ride up to there. That's my thought process. Because we've already been on the 5 minute to catch each one of these all the way up. And we entered just below, like right at this, so best entry before retrace. I just need to see it play out. Hello there. Let's go ahead and close out another 0.4. 0.2, 0.4, that was 0.2, 0.06 off of 0.1, so we have 0.4 remaining to 4. That number is accurate to me. Balance. I know I took a fee out of that. What in the world? Huh? Why is there a fee? That's weird. I don't know why that was a thing. .04 is correct. Why did it take it though? This is correct. It feed us for both of them. 0.02, 0.04. Why did it do that? I don't know why. It's never done that to me before. Maybe because I went too fast? I don't know. I claimed both though. I mean, that works. That was weird. Don't know why I did that. That's funny. Hmm. Coco and Thanos would go insane. My music stopped. Where did my music go? Hot dog. Yes, I'm still watching. Mm-hmm. So we got a break of structure, retest, breaker block, should continue higher from here on the 5 minute for S&P. NASDAQ should follow suit as well because we don't have an S&T within this, so it should continue higher. I'm going to leave it right there. Watch it carefully. Why does it keep pausing? Did not. Did not pause. It's being finicky. My Moza keeps pausing. I don't know why. $10.30. No entry. No more entries. No more. Weird. So I think I've run into a problem. I think I was right about this range right here getting hit and potentially getting reversed on. And this right here is where we need to be out. I want to wait for it to come back up into this range before I leave. But at the same time, if it barely gets above this, I think I'm going to leave the rest of the market. Depends on what happens next, because we've entered a consolidation phase right here, right? And it's under the same gist here. The pattern's the same. Everything about the S&P says it's supposed to be going higher. Everything about the NASDAQ says it's supposed to be going higher. With the exception of this right here. We made a lower high, lower low, lower high, lower low. This is a sign of a downtrend. The big problem here is we don't have an inverse for value gap anywhere in this saying, yes, inverse. But at the same time, I don't want to see what's going to happen if we get a break of structure here. Because if we get a break of structure, that's automatically going to get hairy and get down there. It's going to, don't take that out of context. It's going to break structure and then stop us out immediately after. And that is something I do not want to happen. So, very tempted to leave right now. Very, very tempted to leave. Unless we can get a break above this right here and it solidifies and continues. Very tempted to close out. I know it just hit that range. I want to see it go higher because it's already broke past it. I want to see it. I know this is a bad move. So we have an up here. This is our new low on the S&P. I don't think it's going to give it to us on that, so we're going to wait for that to happen. Everything says up. Nothing says down, which makes me think it'll continue. There is the likelihood it can just flip, though, because it's had enough. It's consolidated enough. Weird. Tomorrow I'm going to do something a little risky. At this point is make or break. Tomorrow is that. Just make or break. Okay? What do I intend on doing? I intend on getting online early, watching pre-market and what it does, using those moves to calculate, guess using the same confluences and everything, what exactly is going to happen after market open? Because we had a manipulation of the low, and then it moved up higher. The bearish confluence broke. It was a false bearish confluence. We had a break of structure immediately after. But if we don't get an S&T tomorrow, use the other confluences because they work. Follow the gut feeling and anticipate it. Put my stop loss where it needs to be. Watch. We have not broke structure on the NASDAQ yet, so I'm going to wait patiently. I don't think we broke structure on the S&P either. No, we didn't. When is the next set of news? $115. There's a little bit of time before that. So mini S&T right here towards the end, I guess. From this low to this low, this is higher than this one. Compared to this right here, this one being lower than this one. Meaning the selling side is almost out. We could be seeing a push higher. Hmm. Yeah. The reason I exited market, we have danced around this for a while now, and it's a bearish reversal based on the SMT. Similar to what happened just now, just beforehand, we had a bullish reversal down here. And that reversal essentially just said what it was. We broke structure here, created the SMT, right? From this SMT, there was a reversal, the break of structure back to the upside. And so we saw that continue up higher. The reversal was this break of structure. The SMT is the confluence just before the break of structure / reversal, right? Using the SMT, we can accurately pinpoint where it's going to be based on, one, the range that's broke out, two, the order at which it forms, right? The range, the first chart to break out of the range gives the SMT we need. Which one, bearish or bullish? And then from there, we wait for the reversal on one of the two. And it typically occurs as it breaks out of the range. In this case, NASDAQ did. We broke out of the range. I'm wrong. S&P broke out the range first. Okay. It gave us bull run, right? Broke structure here. And from there, we see it move higher just a little bit. But this is the weaker index. This would have been the smarter one to trade off of. But a reversal was what we were looking for. NASDAQ broke structure the same way the S&P did, but immediately after reversed back to the upside. It targeted something, bounced off of it, and we saw it run all the way up. Bearish, right? In the case of this, when we spot an S&T, expect a reversal on one of the charts after the previous weaker chart breaks out of range. Once that occurs, expect the other one to go the opposite way. And then from there, it's just a matter of depicting the confluences needed. Break of structure, reversal, fair value gap, continuation. Enter on fair value gap, watch it continue higher. Now, we did just that. We did that, right? And we did watch it come back down, retest a order block, breaker block style, and then continue higher. We got two, technically three take profits in this one run right here, this one candle. And from there, it consolidated. Now, there is a slight problem, and I have a problem with it, kind of. From order block to breaker block, it makes sense to wait, right? Because when a breaker block retests an order block, it is the de facto confirmation that price is going to continue much more in that direction, right? In the direction of the break of structure prior to the breaker block. I felt the stretch coming. I just didn't know when it would hit or where it would actually target. It felt great. But, order blocks to breaker blocks versus SMTs. SMTs show trend shift. And they are kind of finicky because they don't respect the same boundaries as breaker blocks do. Breaker blocks are a surefire way of, if it's confirmed, expect it to continue. But if it's not, expect the inverse, in which case the other chart might have respected it, and that could be entirely based on the SMT. But the SMT, without any other confluence outside of a break of structure or an inverse value gap or that kind of thing, gives room for lack of profit, in the sense that we caught this at the very end of the move, right? We didn't catch this imbalance. We caught the consolidation and the hopes that it would continue higher based on the imbalance, right? And it could continue higher. It very well could. But at this current point in time, how am I to know that? Especially when we have an S&T. Here's now, this was the low we were after. This is another low. The NASDAQ did just that. It went from low to low here, and then from this low to this low here. Very different. And because of that, we could see it continue reversing, which is problematic because we could see it come down, stop us out. Yeah. My reasoning behind exiting was the consistent consolidation right here, the acceptance of this price range, and the potential for price to reverse back off of that from this imbalance going up. I hate the fact that we didn't catch this imbalance first, which leads me to think tomorrow is going to be a little bit different. If I hop on early enough to catch pre-market open, I could probably spot a move similar to this right here, where it breaks structure temporarily and then anticipate when market opens a reversal based on S&T between the two within this range. Do the exact same thing, except expect the inverse to happen when we see this break of structure here. We see the break of structure, and then from there we look for equilibrium on the 1 minute, because I'm pretty sure, let's go ahead and just take a look at this, because this is the 5 minute. Let's go to the 1 minute. Let's go over here. So this is market open. This is just before. We had break of structure right here, right? We could have waited on the 1 minute for this right here. Based on the S&T's reversal confluence, we would have waited for price to come within equilibrium, but to close on the opposite side to this right here. Based on that, we could have waited for it to just do that, close, and then from here, enter here, catch the entirety of the imbalance, and maybe a little bit more right here. This would have been a little bit more profitable, just a little bit more. And I'm not saying we're going to swap from 5 to 1 when entering, but that this right here is more of a riskier move because we don't know what market open is going to do until it happens. Because beforehand, we were in an uptrend, and right just as market open, we saw a giant spike up, right? But it wasn't as eventful as, let's say, this for value gap was midway through. Instead, it had to break structure in pre-market before it could make this move. So, that's the thing. Hope you guys enjoyed today's video. I'm not going to lie. I am not going to lie. I don't know why this is a thing now. I don't know if it's just the NASDAQ, the way that happens. I don't know if... Because I took a trade on NASDAQ before. Yeah, right here. NASDAQ 100.mini. I did the same thing. Why is it... Why did these change? I didn't change these. So I'm not allowed to use minis anymore? Like, futures are out? Thought I'd be able to do minis. Hang on, let me see something. trying to figure out why exactly my stuff changed from mini futures to indexes. I don't know why that is. If you enjoyed the video, give it a like, thumbs up, share, comment what you think I could have done to better get this trade in the way I needed it to be. There's our break of structure reversal from the previous S&T. That would have easily come down and stopped us out. But yeah, I know what I did here. I know my lesson to learn from this. Yeah. Thanks for watching. Tuesday is my final day of September to take a trade, and I'm actually looking forward to it. I'm pumped. I'm excited. I'm going to get some decent sleep compared to last night. I'm happy with today's trade. I know it wasn't as the best trade I could have taken, but it was a trade that was worth refreshing myself on. Because from, again, this past week, just learning and learning and reading and reading and reading and reading and reading, it's so easy to get sucked into whatever you see across the internet nowadays. And I'm happy to have taken the time to say, okay, I'm going to set my phone down. I'm going to stop reading. I'm going to stop doing a lot. And I'm going to focus on the strategy that I myself have been learning for the past 4 years. Ultimately, that's what saved me in the end. And I'm happy to have refreshed myself on both the exit strategy and the entrance. So that way I can further take trades that are worth taking. The risk to reward sucked, but it'll get better. I'll get better at it. Thanks for watching. I will see you guys in the next one. Stay tuned Wednesday for a stream, and if you're interested in watching any of my other content, be sure to check out the links all the way up there. Just type in those names up there. And yeah, Orbs Vaults, that YouTube channel up there, is my vault channel. That's where you're going to find all the VODs. From there, you can literally find every single one of the other channels on that if you're interested. Yeah. Again, thanks for watching. I'll see you guys later.